Hi, this is Zak Mir, editor of Spreadbet Magazine, with a look at some bulletin board hero stocks amongst private investors on Friday, June the 27th. And I'm starting off with Gulf Keystone, where we've seen the second higher low for June around the 79 pence mark lead to a decent break to the upside, a clearance of the 50-day moving average at 91 pence, and presumably a chance of a retest of the best levels since April towards £1.10. Stop loss, an end of day close back below 91 pence for aggressive traders should be enough. That's the 50-day line. In fact, if you look at the RSI indicator, you can see how we had an uptrend line from March, and there was a double bounce, the second bounce this month, which triggered the big rise. The RSI is only at 58 currently, which means that even though we moved up a lot yesterday, there's still plenty more in the tank technically for this stock. But at this stage, even though we've seen a decent bounce, probably best not to get too excited about how much upside there may be given the falling 200-day moving average and just the way the whole structure here began with an unfilled gap to the downside. So 105, 110 probably the best on the in the outlook over the near term for Gulf Keystone. A couple of smaller stocks, Doriemus. I know a lot of people follow that sort of Doriemus crazy at the moment. Good prospects here still. We had the bull flag breakout, which was the best and the easiest buy signal here. What looks to have happened now is that we've tested that the top of that flag at 0.19 pence as new support. That, along with the 10-day moving average at the same level, should be the end of day close stop loss on the buy argument here. The structure here is that we're looking for 0.35 pence as a best case scenario target over the next 4 to 6 weeks or so, but we want to be careful of any break back below, back into this flag zone, which was 0.16 to 0.19 pence. So I wouldn't like to see the stock back in that flag. Otherwise, we should head back higher towards the top of the November price channel, as I said just now. Finishing off with the stock of the moment, I suppose, which is UKOG oil and gas. It seems to be quite predictable both on a fundamental and a technical point of view. The overall structure here was a broadening channel with the 1.5 pence target, which was hinted at earlier in the month. We had a beautiful bull flag breakout earlier this week and hit the target quite easily. The explanation of what's happened since is that we've tested the top of, or we were trying to test the top of the flag at 0.95 pence as new support. That looks to have been done. And there's also the 10-day moving average here at 0.96, which is a trading stop loss on the buy argument. So a partial or even full retest of the best levels around 1.6 pence plus seen over the near term. I know there's some news out today as well, but I'm doing this analysis pre-market. Above 1.6, we could head back up to 2.5 pence reasonably quickly, but taking it one step at a time. Looks like a reasonable intraday reversal for the shares and a return to the 1.5 pence plus zone. That's it from me. More updates at spreadbetmagazine.com.